All right, morning everyone. Welcome to another episode of the Daily High. I'm your host Tone Vase. Please give me confirmation on audio and video. Another solo show, and need confirmation here since I don't have a co-host today. Matt is super busy down in Southeast Asia. Uh, he's heading to the Philippines for another fight. And I think he was in Malaysia today. I'm not sure. Uh, all right. Audio is good. All right, good. All right. All right. So we're all set. We are all set. This is all right. So let's go on with the chart. I see a question in the comments. I got to rewatch my last video. I was bullish for multiple reasons yesterday, but last show. But I honestly already forgot what I was gonna say. Um, in the last show, the chart looked bullish. It looks a little less bullish today. I'm gonna talk about that, but also the fundamental reasons and the cycle reasons. I mean, these are the main reasons why I am bullish. We are looking at three things. The TA is bullish, and also most likely what I meant was that the stock market was very, very bullish yesterday. So these are the main reasons why I am bullish on Bitcoin overall. You can see that the weekly TA on this chart is bullish. The daily is a lot less so, but the weekly we're still on a 7 with the MRI. Yes, we had an extension C. We broke out to new highs. We have a very clear new swing high, a very clear new weekly close. Now, we've had this before, and it led to a crazy bear market. This was back here, back in 2021, where we had a pretty clear pullback, and then we reached new highs, clear new highs. We broke the all-time high by about the same percentage we broke this time. We broke the weekly close by approximately the same percentage we broke this time as well. So everything looks similar. Now, this situation, as you guys know, I have this arrow here. I was very, very bullish in November of 2021, and I was very, very wrong on that prediction or on that outlook, I would say. We don't really predict things. And this is a very rare situation that this happens. So I am not expecting this to happen again. In addition, this is a much cleaner new swing high because this particular pullback actually came to a proper level of support. I mean, yes, we didn't perfectly touch this blue line that I had drawn. We didn't perfectly hit the prior swing high. But if I zoom in here, you will see that the prior swing high back in March of 2024 was what do we got here? Almost $74,000, just under $74,000. Now, what about the swing low? The swing low was just over $74,000. So while in reality, I would have loved to see this gap completely close, but as you can see, look how thin this gap actually is. I am okay with that. That is within the margin of error. So unlike the bear market or the big pullback back in 2021, we did not even come close to the prior swing high. And that swing high took place way longer in the distance. So this gap was a lot more dangerous. We're talking just under 20,000. I don't really want to zoom in. Yeah, something like that. It was about 19,000 to 30,000. Do you see the difference in the gap between the prior swing high and the swing low? in between the double top. This is a very, very different situation. And even though I was bullish here in November 2021, the strength of that bullishness was nowhere near like it is right now, because this is built on way sounder footing. You can also see that the long-term moving average is way closer to our current price than it was at the time that we reached that new all-time high in 2021. All this is just a long way of saying the current breakout to new highs is a lot stronger than the breakout to new highs which took place in November of 2021. And if I was bullish in November of 2021 on that breakout, obviously I am even more bullish than I was then on the current one. And let's hope I'm not wrong like I was last time. Okay. We're also coming off a beautiful MRI buy opportunity, and we have not yet reached an MRI top. And it would be interesting if we don't reach an MRI top, which means if we have a down week this week, we can break the count. Or if we have, not a strong week next week to the upside, we will also break the count. And breaking the count is not a bad thing as long as we avoid a red star candle. And so we can set up a whole new count and then kick off a new, 10-week or so move to the upside. Okay, that's the weekly chart. The weekly chart is on a doji candle right now within a pullback. Nothing really interesting to say on a weekly chart other than the long-term view of the weekly chart. I am very concerned about the weekly CMF. I discussed it on the last show or the show with Matt. That is very, very concerning. The other metrics are not concerning, only the CMF. And we got a little bit of an issue here with Socrates' MSR, which looks like it's rolling over. This is not good, but let's hope it's just a short-term pullback. Okay, the 4-day chart, I'm not really going to talk about that much. I don't talk about that chart anymore. This is my biggest concern right now. We are looking at the daily flipping over. This is very, very concerning. We have the short-term moving average, which is this should be the 20, 50, and 128. This is the 20-day moving average, and we have fallen below that moving average, and we have now gotten rejected by that 20-period moving average. That is a concern. We've now spent a whole candle under that moving average. After the rejection, this moving average is about to roll over, and we are approaching this prior swing low from last week. That is bad, very bad. So we have not yet flipped the MRI count, but we will unless today rallies to a new swing high versus the last 3 days at the close. So at the moment, I am fairly confident that we have a little more downside left, even though it's a little too early to call that. We do need a close. We do need a new swing low close. And if we get the new swing low close above 104,000 on today's candle or tomorrow's candle, and especially if it shows up with a red star candle, which it will tomorrow, if it closes tomorrow below 104,000, we are looking at a move down into the 128-day moving average, which in itself is not a bad thing. I would actually welcome a move to the 128,000. However, with every move down, it increases the possibility of more moves down. We now have the 200-day, which is sitting right here. You guys may not be able to see it, but I see it. It's within alpha numerics. this green wave, if I do one of these, you'll be able to see it a little clearer. You see that little discoloring there? That's the 200-day moving average. It's now above the 128-day moving average. So the moving averages are not in a perfect order. That's because the 200-day involves all of these candles near the top from back in January, and the 128-day is not involving those. It's only involving all of these candles down at the bottom, and the 50-day has already eliminated these candles from its calculation. This is what's happening here. So a move down to the 50-period moving average opens up the possibility of a move down to the 200 or the 128. We do need to test the 50-day moving average. We've been above the 50-day moving average for about 2 to 3 months now, and at least, well, maybe not 3, but almost 2 months. And it would be a nice welcome sight with a beautiful bounce off of it. But hey, if we go to the 50, we're now in danger of the 20 breaking below the 50. So we want to see the prices go straight up. I really thought that the 20 period could support the price, but it clearly did not. So we now have to delete this arrow. I'm now putting this arrow in. Actually, I shouldn't have deleted it. I should just move it over. I think there is a good chance that we will bounce off the 50 and challenge the new highs, but this is in no way guaranteed. Okay, in no way guaranteed. Okay, for now, I would be putting on some hedges. I would be considering exiting, over leveraged bullish positions and re-entering those above the 20 period moving average at the close, and maybe a full daily candle above the 20 period moving average. That gives me confidence that we are ready for, the 120s. At the moment, I am concerned that we are going to break the lows of 4 or 5 days ago. So I hope that explained it all. Very quick on the oscillator side, the MACD is going down very, very quickly. That is bearish. The RSI is looking exactly like the price chart, right? You have this 50% support. And if we break that, then it's possible we're going to go into an oversold zone, which, again, would be a great way of picking up Bitcoin. You can see right here, we hit an overbought zone in November of last year, and we hit an oversold zone in February. So let's see, so here's December. We hit an overbought zone on the RSI, and then we created divergence. We created a little bit of a divergence. I can see it right here versus January. So let's go back to the RSI. See, we had divergence. In November we went all the way up. Now here's January, here's December even, and here is January, right? We were diverging all the way through. We even hit it in November. That's up here. There's November, right? Then we diverged versus December, and then we double diverged because we went a little bit higher right here in January. And we double diverged with the RSI, and then it was all she wrote, okay? This would have been a very tricky one. This would have been an easy divergence to spot. I don't know if I talked about it at the time. I don't remember. My memory is good, but it's not that good. And this would have been a hard divergence to spot because when you're just breaking above, you're expecting it to keep going, so divergence may not hold, but once it reverses, then we have double divergence. And you can see the same thing with the RSI, with the MACD. So now we don't really have divergence this time. We don't really have divergence this time. We just have these two breaks above, even though we are going down. The prices, it's not that this could be that hidden divergence thing, which I'm not a huge fan of. But we had overbought on the RSI, and now we're heading for the oversold on the RSI. So that We had a beautiful buying opportunity at the oversold period back in February, and then there was a higher swing low in April. Where did the low come on the price of Bitcoin? Let's see. The low came in April. So we had RSI divergence again. See, we had a lower price, but a higher RSI. That is a divergent situation where the price is probably lying to you, and the RSI is accurate. So we just need an RSI oversold, and that could be a nice buying opportunity. The CMF, which I liked on a daily chart a few days ago, I no longer like it. Look how quickly the CMF crashed as well. So everything is pointing to some lows. We do have MSR. There it is again, in a nice area for a potential reversal soon. So if the price crashes real quick to 100 or 99,000, that could align everything between the RSI, the MACD, the CMF. Everything could align with a nice swift crash that can take us below the 50 period intraday, but hopefully keep us above the close. As far as the RSI is concerned, it would suck to have to endure a full, sorry, as far as the MRI is concerned, it would suck to have to endure a full MRI move into an MRI buy. I would love to see an MRI buy, but in order to get a clean MRI buy and stay above the 50 period moving average, you need a very slow bleed into the 50 period moving average. And I think a slow bleed into the 50 period moving average is more unlikely. Let me just reply to someone. I think a slow bleed into the 50,000, into the 50 period moving average with a swift reversal is more unlikely than a swift crash through the 50 period moving average, a quick reversal, maybe one or two closes below the moving average, but nothing too dire, and then reversal. And if that happens, now we have a bit of an MRI mismatch with all the other indicators. So we're going to take this one day at a time. I'll try to bring you a few more shows later this week because this situation is very, very interesting to me. Someone in the live chat said, oh man, I have some bills to pay. I would love to know what's going on with Bitcoin over the next week or two. And I am the same way. I am also very, very interested in what the hell is happening here for the same exact reasons. So this week is going to be super interesting for me. I'm hoping to see a slow bleed, giving me a nice clean MRI buy, maybe a crash on the 8 candle or something with the MRI to the downside, maybe a move down to 99, no closes below 100K, and then a quick move to new highs. That would be a nice pullback, setting us up for 125, 130 in late June, early July, maybe even 130 by sometime in July. All right, guys. I have a call at the top of the hour. Here's the short term. We were looking like we can recover this morning. Here is the market opened, and of course it sucked. Bitcoin is very correlated with the stock market. Let's look at that 10-minute chart. Here we are at 9 a.m. There must have been some economic news going on. Here's your 10 a.m. reversal. What a beauty. What a beauty on the 10 a.m. reversal right here. A few minutes later, would have been nice to see it like 5 minutes earlier, but that's okay. 10 a.m.-ish reversal here. But I think it's done. I think the 10 a.m. reversal has withered out. Another reason why I'm bullish is because we're in this part of the cycle where Bitcoin tops, but this just doesn't feel like it was the top. I still think there is another top coming, and it may actually extend past the normal top window. I updated my ETF statistics. We had a very good month of May. We're kicking off the month of June. I'm leaving this in green because I think the month of June will be green as well. So far, we're having an incredible quarter of ETF purchases. Everything continues to flow only into the iShares BlackRock ETF, and it is now completely dominating volume. Look at this. It has more volume than all the others combined, times like 5. This is just unfair, what is happening right now. It is completely crushing it. All the other ETFs have the same amount of Bitcoin they had like 9 months ago. And BlackRock has gone up by like 50% in the last 9 months. It's completely crazy. All right, oil. I am kind of bullish on oil here. I got to dig into some of the fundamentals there. Gold. The gold chart looks very bullish. We looked at the gold-silver ratio the other day. Let me pull that up. I think I have it somewhere. Where's my gold-silver ratio? I thought I had it somewhere. Is it here? No. Interesting. All right, maybe I closed it. Someone was asking me for the price of silver, like the chart of silver. Open chart layout, silver. Silver is back to $35. That's why its ratio was starting to do well. I personally can't see silver going above $50. I think if silver hits $50, it'll probably decline all the way down to 35 or 30. I think it'll be I mean, silver is just, there's too much silver in the Earth's crust. So if silver goes to $50, people will be mining silver like crazy, and silver is going to go down in price. Good time to sell silver. We can talk about silver all day. You can do arbitrage with silver. If silver hits $50, that's when you can arbitrage within silver. Buy Morgans. So you sell your 1 ounce and you buy junk silver, which is quarters pre-1964, and you buy Morgans, which are Morgan dollars pre-1910. I have a few of those Morgan dollars. They're super cool. So you can arbitrage within silver. Morgans will never go down below like $15. Even if silver goes down to like $10, which it can, even if silver goes back to $10, right here, Morgans will probably stay above $20. Even if silver goes down to like $15, Morgans will stay above $20. But your 1 ounce coins will go down to $20. To $15. Morgans have a collector premium, and that collector premium disappears above $35. It's just gone. There's no collector premium anymore. So right now is the time to maybe buy Morgans, so that when silver goes down, you have a collector premium, which your Eagles will not have. But that's a whole other discussion. We're ignoring the premium. We're ignoring the 10% premium on silver. That's not a collector premium. That's a dealer premium. The dealer premium exists on all silver, but junk silver and Morgans have a collector premium as well. But if the price of silver is high enough, the collector premium is just gone. So you can arbitrage within silver. The S&P looks great, which is why I'm extra bullish on Bitcoin. Let's go to the short-term chart. If the S&P goes up, Bitcoin will turn around. Even no matter how bearish the Bitcoin chart looks, if the S&P starts breaking out, so will Bitcoin. Just imagine if the S&P is breaking out, then companies have more money to buy Bitcoin into their treasuries. I hear Robinhood is doing it now. Maybe one day Coinbase will actually buy a Bitcoin for their treasury. Maybe sometime in the year, I don't know, 2148, the new CEO of Coinbase will decide to actually buy Bitcoin because he thinks it's a good asset. Because at the moment, I don't think he does. So there are companies that are considering buying Bitcoin into their treasuries. Like I said, maybe one day Coinbase will be one of them. But other companies will do it. And the better the stock market is doing, the better the economy is doing, the the more likely companies are to buy Bitcoin, and the higher Bitcoin goes. US dollar continues to crash. This also kind of favors Bitcoin. I'm very surprised, but hey, Trump is on a mission to crash the US dollar to make whatever the hell US makes more competitive. Good luck with that. And maybe oil, maybe, I don't know, Instagram services, because we sure hell don't make any goods and services to export. So the crash in the US dollar should also help Bitcoin and also gold, and also the stock market. The stock market does get slightly benefited by a weaker dollar. Yield curve, no time. Ultimate price for the Dow Jones, 100K. And here's the gold-silver ratio. I didn't see it because I usually have it as a line chart. And the gold-silver ratio might have topped. And this is where silver should be outperforming gold for a little while. And then the trend will resume. Okay, that's it for me. Thank you all for watching. I don't have any events to announce. Please check out Matt McGregor. Is this it? Nope, those are my DMs. Let me not pull those up. I'll pull it up next time. Matt McGregor will be fighting in Manila this Saturday, so check that out. I'll talk more about it next time. I got a call in 3 minutes. Talk to you all on the next one. Bye, guys. This is minor profitability. I can't wait to watch it break out. All right, how do you end this stream? I'm a rookie here. Bye, guys.